Hi, Clint Carpenter here, investment advisor at Eckman Wealth Management, talking today about the great mysterious credit score. What's a good score? What is a score that could use some improvement, and how to make those improvements? And probably most importantly, why should you care? Especially younger people just starting out in their great future of credit and using credit. Why does the score matter so much? So I'll start with the basics. A credit score is just a number between 300 and 850 that is designed to represent your credit worthiness or your credit risk to potential lenders. And by the way, I'm not saying that this is a system that doesn't have flaws. I'm just describing the system as it is in our country and maybe giving you a few tips on how to kind of use it toward your advantage, basically. So anyway, as you can imagine, somebody with a high score, they're not going to have very much trouble getting the loan that they want or the credit card that they want, and usually at pretty favorable rates as well. Somebody on the lower end, they're going to have some more trouble, basically. If it's very low, might just out and out get denied for the credit that you're looking for. So a low score, typically something between 300 and 670 is considered poor or fair. Then you move up to 670 to about 740. Those are scores in that range are good, basically. And a 740 to 800, very good. 800 to 850 is considered excellent, and you can't really get any better than 850. Having that score at the top of the scale, it's difficult to reach that point, but once you do, it certainly unlocks opportunities. And I would say that starting with a low score and getting it up to sort of a favorable or even just good rating, it takes some work, but it's certainly doable. You shouldn't feel defeated by any means if you're in that lower range. You just need to do a little bit of work to kind of demonstrate to potential lenders in the future that you have your act together, and that you're responsibly using credit. So, those lower scores, it's going to impact getting a mortgage in the future. That might be pretty far off, but somewhere earlier in your adulthood where it might affect you is just getting a credit card or a car loan or a student loan. Having a low score is going to make that difficult. So that is, I think, why it should matter to you. You need a good credit score. So first, let's talk about some things that negatively impact your credit score, especially for younger people. Again, the length of your credit history, or sort of the average age of all of your credit accounts, it's important. It demonstrates to lenders that you have responsibly managed credit in your name over a period of time. I say it's important for younger people because it's something to be aware of when you're kind of starting out and starting to look at your finances. If you're kind of the mindset that you want to just completely avoid credit in order to kind of stay out of trouble or keep your credit tidy, that might not be such a good idea, because you need some history of using credit eventually. So the earlier you start out, it could be a good thing, not a bad thing, basically. So, as you're considering applying for new credit, be careful certainly to limit, how many new lines you actually apply for. The number of inquiries that you make can hurt your score. So, if you've applied for 5 new credit cards in the last month, that 6th one that you apply for, that lender might kind of say, what's going on here? Why does this person need so much credit, and why are they applying for it all in such a short period of time? That's the sort of stuff that's certainly taken into consideration. Do your research and settle on a loan before you go and apply for it, so that you don't rack up those inquiries. I'd say, finally, of course, we know that making on-time payments is incredibly important, right? To your credit health and just to your finances in general. Missing your payments or having payments go to collection, that could really hurt your score and take, quite a bit of time to recover from, and just kind of, demoralize you, basically. So try to certainly avoid that. So on the more positive side, how can you increase your credit score? I think utilization is something that's important to talk about. First, it's kind of two pronged, if you will. First, you don't necessarily need to use your credit card very often, and you certainly don't have to carry a balance. That is kind of a myth that is out there. You don't have to carry a balance and pay interest to have good credit. That's just not true. You do want to make sure that you use any open credit cards that you have on a fairly regular basis, though, just to make sure that they're not being closed for inactivity. That is certainly a risk. It happened to me when I was very young, with my very first credit card. I got it, I used it a little bit, kind of stopped using it, and maybe a year went by, something like that, and it was closed. I didn't request for it to be closed, it was just closed for inactivity, and that kind of set me back in terms of that credit history that we were talking about earlier. I just lost a little bit of time, and that time in the beginning is very valuable. So, be careful there, basically. You also, I think, if you are carrying a balance for whatever reason, obviously you want to try not to, but if you are carrying a balance, you want to keep that balance below 30% of your overall credit limit. So if you have a $10,000 credit limit and you have a $3,000 balance, you're using 30% of your available credit. So you're at a 30% utilization rate. You want to keep that lower. One of the ways to do that is to apply for more credit. It's kind of a strange concept, but the more credit you apply for, the higher your credit limit is. That means that utilization ratio can go down. Don't follow this tip, though, if you don't feel like you're responsibly managing your credit. If you think that you're just going to apply for a new card and max it out and, keep the cycle going, this short-term kind of benefit to increasing your score is not worth that. So certainly, avoid that. It's kind of a double-edged sword. Your utilization will go down, but you might just be causing more issues. And another thing to keep in mind, if you're applying for new credit, keep that credit history in mind. Like I said, every new card you apply for, your credit history is an average. So you just got a new card, you're comparing that to your very first card. If that's a short period of time in between there, then your average just shrink, and it might not be worth it to you. So, just like anything financial, credit scores and specifically your credit history, very individual, very complicated, and I shouldn't say complicated, just complex to wrap your head around in the beginning. So if you are confused about your particular situation or just want to talk to somebody about it, go more in depth and get more kind of detailed advice about your specific situation, please give me a call or an email. That information is below in the video description. I'm curious to know what other sorts of personal finance information that people are interested in. So, let us know in the comments or send us a message, something you might like us to cover in the future. Certainly you can like this video or even subscribe to the channel to kind of increase your chances of seeing more content like this, whether it's from me or from other video creators out there. And thank you for watching today, and I hope I've demystified credit scores at least a little bit for you, or maybe given you, somewhere to start your own research. So thanks for watching.